Good morning. Thanks so much for tuning in to the Trade Setup right here on Bloomberg Quint Live. I'm Neeraj Shah. Yes, we got the Olympic gold over the weekend, and all of us are ecstatic about that. But having said that, since Olympics are behind and since India-England test is drawn, let's focus completely away from sports onto the trade setup. Um, okay, so the US futures are flattish. So keep that at the back of your mind. There's no major cues coming in from the US futures at least today. But there's this very interesting chart, and it's a long trade setup, so I'll get straight to it. There's this very interesting set of charts in a story on BloombergQuint.com, which, well, yeah, this one and there's one earlier as well, which shows how the set of sectors which are now reacting to any kind of additional information or cues, and you will see that the lockdown related sectors and stocks are now starting to take a back seat. There's also, by the way, so this is a part of a story on our website, bloombergquint.com. I would urge you that if you read the story, there's also another chart out there which shows how in Europe, for example, there are these bunch of stocks which last week or since the results have been declared have actually fallen 5, 10, 15, 20%. The reactions on some of the favorites in the pandemic era, we're probably still in one, but the favorites of that era are now starting to take a bit of a back seat. Now, it's already happening in Europe, in part it's happening in US. Could the same happen in India? That's the question you ask yourself. Should you position yourself, therefore, in pockets which will actually benefit from the economy opening up? Much as we don't see the economy opening up right now because we're still caught in this whole thing of what COVID will do and probably can do, I think you got to start taking some bets on those as well. Of course, if you have to take bets, it's also a bit of a risky proposition. But nevertheless, I'm just telling you what the reactions on different part of the world are. It's a very interesting story. By the way, you may want to go in and read about it. We'll try and bring that up at some point of time if we can. Anyways, so that's the key chart that we wanted to show. Now let's go to the trade setup for the day. Keep in mind the SGX Nifty, and we'll get to the world markets at the end, but the SGX Nifty might be pointing towards a flattish start. So what to watch out for this week? No major global data impacting Indian markets to be released. There is the US inflation data, but I really doubt that it has the capacity to really move the needle too much. If anything, if it is slightly higher than anticipated, then people will start talking about tapering, etc. I doubt that this has really major cues about a major impact on Indian markets. The IP CPI data will be released on Thursday, so that will be something that will be important. 4 IPOs open for subscription, Rolex rings list today. So those are a few things that you got to keep in mind. Some key results this week, by the way, and there are a bunch of them. I've selected a few which I thought were important and trying to kind of categorize them specifically. Okay, so the first 3 are the index names, so watch out for them. Then consumption firmly in focus. So the likes of Mrs. Bector's, Westlife, Burger King, in light of Zomato, in light of the opening up, I think the commentary from each of these would be very, very important. Then the old economy, you said Jindal Steel and Power, NMDC, Oil India, very important. Sun TV, Praj Industries, and Bharat Forge are amongst the key ones. Sun TV, I'll watch out simply because last quarter they got a bashing of the lifetime from investors about what are they doing with the cash reserves. If they do some announcement around that, keep in mind the stock could be active. Praj obviously is at a big run, and therefore it's imperative upon the company to deliver. And Bharat Forge viewers, you would remember, you should hear the conversation that we had with us the last quarter. They promised delivery. It'll be important to see if they do that. So that's the few things to watch out for this week. Now, very quickly, the trade setup for the day. Keep in mind, again, borrowing a chart from, okay, let's do this and then we'll borrow the chart from CK Narayan's story. But these are the mix. I mean, this is my version of the trade setup. I see mixed signals in large caps. Somehow I'm not seeing heavyweights being able to fire. As I was saying last week, imperative for the Bank Nifty to fire, for the index to move up higher. About time that the Bank Nifty does that. ITC has done its bit. Reliance has done its bit. Bharti's done its bit. It's imperative upon the large cap banking stocks to do that. Sectoral bets, I believe, are the order of the day. FIs are turning positive, and that's after a month, dismal month of July. Remember, July was a net sell of 23,000 crores. And yes, or last week we had a positive inflow of 2,600 crores or thereabouts. So that probably augurs well for the banks. Let's wait and watch. I believe real estate may be back in action after last week, so I'll want to watch out for that. Stocks to watch and a bunch of them. So I'll get straight to them. All right. First, Steel Authority of India. They've reported an all-time high quarterly EBITDA on the back of strong blended realizations. I think about 16% quarter-on-quarter growth versus expectations of 12%, aided by the better product mix. Increasing coking coal prices and seasonal weakness may impact quarter two numbers, but I still think that irrespective of what's happening to short-term gyrations on prices, the fact that they're generating such strong cash flows, it helps them deleverage. They're expanding capacities, hopefully not at the cost of very high debt equity. If all of this falls into place and if prices stay firm or just marginally lower, boy, I tell you, the numbers and the balance sheet will look materially different a few quarters down the line. So to watch out for this one. A bit of a disappointment on the other side from Nalco, I thought. It was expected it'll do well, and its long-term prospects might still be good. But look at the numbers. I mean, quarter on quarter, 12% revenue degrowth, 63% PAT degrowth, margins collapsed really. That was the problem. And, you didn't quite see this happening in Hindalco in such a big way. That is the disappointment, nothing else. If you compare JSW Steel versus SAIL, so private versus PSU, SAIL is still reasonably okay. I think in Nalco's case, a bit of a disappointment. But as Rakesh Arora was saying in the presentation, and he's the expert, so I have no one to counter him, that the prospects look tremendous for some of these companies and particularly Nalco and SAIL. So let's wait and watch what happens here. I thought Tata Power was interesting. There's a beat on a better performance of the Odisha distribution business, to my mind. So Tata Power did really well. It's one power name to watch out for, considering that Torrent Power couldn't do much. The adjusted PAT was flat quarter on quarter, but EBITDA was up 71%. Solar EPC revenues jumped 5x YOY, so very strong, and very strong order backlog as well. And then the company noted that the monetization plans for renewable assets is still in the works. And they are also this big announcement, right? They're partnering with Tata Projects to bid on good quality greenfield projects within power transmission. Tata Power is re-entering power transmission, and that's pretty solid too, because they are in the right mix, right? So to say, in terms of the chain, the integration of the chain. So I was pretty pleased with the numbers really. And as I said, compared to Torrent Power and Tata Power came out smelling like roses. Different businesses, yes, so to say, but in the same space and two diverse performances, so to say. So you never know, Tata Power might react. Remember last week I was talking about how Edelweiss raised the target prices on Tata Power a few days before the results and what it might indicate. Well, it did indicate something. Some other numbers, I think brokerages are constructive on the healthcare stocks post a very strong quarter four by these names. So Alchem Labs, JP Morgan raised the target price to 3759 owing to strong India business peaked. Metropolis, JPM again, raised the target price to 3300 as core growth driver remains intact according to JP Morgan. On Ipca Labs, which I thought was a really good set of numbers, CLSA upgraded the company to an outperform from a sell rating. The target price raised to $2,400. So watch out for this one as well. I mean, I think some of these healthcare names, particularly Ipca, would be very, very interesting. Remember, for Ipca, Q1 results were above all forecasts. All business segments came in above expectations for Ipca Labs. I'm just reading it. I made those notes there. And at 9 to 10% YOY revenue growth, I think the guidance, I think one of the brokerages said that their EBITDA and the revenue growth guidance have an upside risk to themselves. So pretty strong performance by Ipca. Then non-results, just bringing in one name which I thought was important just for the sake of diversity. Indiabulls Real Estate, the numbers came out, but what intrigued me the most, or what interested me the most, was the update that they've given post in the investor presentation. So they are saying, viewers see this, they're saying that in Mumbai, additional saleable area of 0.73 million square feet in Indiabulls Blue over the existing area, aggregating to the net surplus of 2755 crores for the company. What they're effectively trying to say that, remember viewers, because of that change that the government brought in the MADA redevelopment project rules of a couple of months back, as a result of that, Indiabulls gets 2,700 crores worth of additional saleable area because of that rule change in Indiabulls Blue project. Then in Thane, there's an additional saleable area of 0.98 million square feet over the existing area, which is about 1,000 crores. Again, coming to them because of a rule change. And then they are saying that they have some 1900 acres of fully paid land bank, of course, and 1424 crores of additional Nashik SEZ land, which because of this Make in India thing can have a significant impetus to asset monetization. Very rosy picture painted by Indiabulls. They do that really well. I think the numbers are pretty interesting out here. So do watch out for that one. Then Z, I think mixed bag. Not well. I say mixed bag because brokers have a very diverse opinion on this one. The target prices range from 192 from Daulat Capital to CLSA's 306 to I think somebody even gave 350 if I'm not wrong. But nevertheless, I'm bringing you the CLSA note because that seemed the most balanced. They have a buy with the target price of 306. They believe that they're saying that the Q1 ad revenues up 128% YOY, but slower ad recovery after the second wave. The CEO said that the ad recovery is slower than expected after the second wave, but they have plans for 30 new shows across broadcast networks to boost viewership. CLS has retained the forecasts and they believe that the valuations are compelling at 9 times PE. So I think that last line was important. It's available at 9 times PE, India's premier broadcast channel, available at 9 times PE. So let's wait and watch if this one has a bit of a reaction. Some other stocks in focus, Global Spirits. I think the Q1, I mean, the pretty strong show, right? Q1 PAT up 11% quarter on quarter, 3x YOY. EBITDA is all-time highs. I would reckon this stock could react. Hudson Agro, promoter RG Chandramohan bought about 1.05 lakh shares on August 5th. So that's interesting. Amber is interesting. EBITDA is down 70%. In fact, let me focus on some of these numbers, right? The weak results. So Amber was 1, sales down 55% quarter on quarter, EBITDA down 70% quarter on quarter. Indigo Paints, sales down 38%, EBITDA down 53%. Ujjivan Small Finance Bank, they reported a net loss with highest ever gross NPAs ratio. So that was bad. And BEL, wherein sales were down 76% quarter on quarter, EBITDA was down 97% quarter on quarter. So these names, Amber, Indigo, Ujjivan, BEL, Torrent Power, left a bit to be desired. So that was the bit weak. But I would say, viewers, watch out for healthcare in particular. Divi's numbers were rock solid. And some of the others that I said where brokerages have upped their target prices and calls like Alchem, Metropolis, and IPCA are all very, very interesting names to watch out for in the session today. And of course, I will naturally watch out for SAIL, though metals have done a little bit, but Tata Power could be the other interesting one, and Indiabulls Real Estate could be the other interesting one. So those are a few. Just keep in mind, I'll end with some charts for you guys so that you are aware. Remember, I said US is not doing too much. Asia SGX should come in next and just show you what's happening there. Yeah, so this is Z, but yeah, this is Asia, and well, a bit of a green on the screen. Interesting to see what the SGX Nifty therefore is doing in this session today. Just to wrap up and see how we'll start off today. Actually, we should do this at the end every time. That's much better. Bring up the SGX Nifty. Yep, about flattish, about 25 odd points, so no great shakes. And remember, CK Narayan's chart suggests that while we are all scared of further upsides, the trend is in place for us to move up a little bit more, but got to be cautious. Yeah, the hourly candlestick chart, which did well, and this is the story on our website, of course, and the chart after this as well is slightly complicated, but multiple indicators which indicate that which indicate that maybe, just maybe, there's still some more upside here. So viewers, that's it on the trade setup today. Thanks so much for joining in. Can't wrap up without a salute to all our heroes who won the medals for India and made India proud. I mean, if the national anthem didn't bring tears to your eyes, then I don't know what could. Salute to all of them.